to bring in our next guest. That's Jenny Horne, markets correspondent here on the Schwab Network. Jenny, looks like the payrolls number came in more than expected. Take us through the latest.
Yeah, so we did see that the non-farm payroll employment increased by 256,000 for the month of December, when unemployment also at the rate overall was a little unchanged at around 4.1%. But what we're seeing, employment did trend up in healthcare, government, as well as social assistance. Retail trade also did add jobs over the course of the month, following actually seeing a loss back in November. However, seasonally adjusted household data has also seen some revisions to the upside, which I do think is always now a growingly important figure, as some of these revisions become, drastically different than the figures that are obviously first released. But one figure I do think that is so important is that 4.1%, because after increasing earlier in the year, unemployment has been either at 4.1 or 4.2% for the last 7 months now. The number of unemployed people at 6.9 million was also a little unchanged. So I think that's a hugely watched figure, of course, by the Fed. And that's one that I think that you could say arguably is not getting worse, but also not really improving, of course. So it's somewhat of a drop in the bucket. But then again, we did see those that were long-term unemployed for 27 weeks or more is how that's qualified. We're pretty much a little unchanged, but actually up by 278,000 from a year ago. And the labor force participation at now around 62.5%, also a little unchanged. I cannot wait, though, to see, so far how we read this number, because there's a lot, I will say, that is pretty much neutral is my first takeaway here. But so far this week, it feels like the market has read good news as bad, and then bad news has been even worse. So I will say this report, not overwhelmingly positive, but again, it's somewhat, I would say, well above expectations as far as jobs. But I'm just so focused on that 4.1%, and that's the read I'm sure that many will be paying attention to, just because of how closely the Fed is watching it.
Yeah, I think you hit the nail on the head about how data is being interpreted, right? With strong economic data, it seems to kind of throw some cold water on equities. And this is much better than expected in terms of the jobs number. It's so interesting. No one necessarily wants a bad jobs number, but what it signals about the path forward for the Fed is where, you start to get concerns and skittishness. There have been times in the past when you saw good news interpreted as good news, or better than expected interpreted as good news, but that hasn't been the case recently. So you saw the direction of futures, S&P futures, take a dive after these numbers came out. Before, in the pre-market, before the numbers came out, S&P minis across the board, whether we're talking about NASDAQ, S&P, Dow, small caps, they were under some pressure, but it was more mild pressure. Now they've taken another leg down. You're looking at S&P minis down 1% right now, whereas, again, ahead of this, they were off about 0.25%. So it was kind of a, let's wait and see what this number is. Is it going to come in? The expectation was, around more than 100,000, but nowhere near this number that we're seeing in terms of the 256,000 addition in terms of payrolls. The unemployment rate, I think you make a good point about it. It's been in this range, this 4.1 to 4.2%. I don't think that's really what's causing the negative pressure on the market. It's about that headline number. Hourly earnings, I know, is another thing that we pay attention to. What else stands out to you from this report, Jenny?
Yeah, and I will say that it is frankly amazing the way in which we could, this figure nearly doubled what was estimates. And you said average hourly earnings also is one I was going to mention. Those rose 0.3% month over month, also did exceed expectation, or slightly. It's another one that come in pretty much in line with expectations. But the fact that right now we're seeing, stocks slightly lower, at least pre-market this morning in reaction, I think it's too soon to say this is the read of the market, because as we know that we could see maybe the reaction in overall markets and equities here, and then it won't hold to the open. At least that's been my theme this week, where I'm like, oh, it's good news, and then things tend to unravel. But this was so well above expectations, and now seeing this frankly rise in yields typically in reaction to some of this news is making many that are at least on social media this morning say that could the Fed have been wrong? Could bond bonds have been more correct. And I think Oliver Rednick somewhere and his ears are ringing because he's been saying that all week. But I think that this is objectively a good piece of news, especially for, consumers, so above expectations. And I think also 4.1%, while I'm saying it didn't come down, yes, it also is not being raised. And so that's still a relatively, healthy employment and labor force. So there are still things to like about this economy. And I think that that is something to take away here, especially when you break down the individual sectors. There's not a whole lot of movement from November as far as gains and losses. I think this does not rewrite the narrative at all, but I can just imagine after a week of, it feels like volatility to economic data, especially given that we get earnings now, that this is going to be a number that well above expectations, yes, but many will say, then what does the Fed do next? And it becomes fairly speculative from here, Dan.
Oh, yeah. All right. Great job breaking down the numbers from the latest jobs report. The Labor Department reporting the economy grew by 256,000 jobs in December. Jenny Horne, markets correspondent here on the Schwab Network. Thank you, Jenny.